Hi guys, welcome to the channel. Today I'm going to do something a little different. Normally I start out with a stock valuation, but I'm sure like many, you're curious about the overall market. So we're going to be using computer modeling to forecast the S&P 500 for the next year. So with that, let's get right into it. Okay. Moving over to my computer screen, you can see I already pulled in the data. And the last one here, number 8, that's the index. So that's going to be the S&P 500. And I'm using the SPY ETF. And then I got several other macroeconomic points here to use to help predict our forecasting. So let's jump over to the forecast tab. I already ran the analysis for the computer modeling using two approaches, the M5 rule and random forest. This is just to help save some time. And right here, August 21st, 2023. So this past Monday, the SPY ETF closed at 438.15, and all the values underneath it with the asterisk. So those are our predictions over the next year, week by week. And these other columns, those are the other macro data points like GDP and inflation. But we're really only focusing on the right column for the S&P 500 ETF. And going out 1 year, so August 19th of next year, right now we're projecting a pretty flat market, 441, so only up a couple of points from today. And I will put this into Excel so we get a little better modeling. And then moving over the random forest, it says a little more bearish, so same thing. August 21st, closing at that 438.15 and going down 1 year out to August 19th of next year, 409. So quite a drop from the current valuation. So let's look at this in Excel. It's a little clearer to see. Here in Excel, you can see I already brought in the data from Weka, so the M5 rule and the random forest. So let's jump over to the graph tab so we get a little clearer picture. So here on the graph tab, this is the M5 rule graphed, and everything to the left of this red line, that's the historical data, and everything to the right is what's being forecast or modeled. So the blue is the forecasted stock price, and the orange is the percentage change for that valuation. And going out 1 year to that August 19 of 2024, you can see here looking just under a 1% projection for the S&P 500, really 0.66%. So it's going to be a pretty flat market from what I'm predicting based on the macro data points I used, such as unemployment, GDP, inflation, as I mentioned, and a few other. So let's jump over to random forest, which is actually a little more bearish, and we'll probably see this drop even more. Now that we got the random forest data pulled in, as we mentioned on the Weka, projecting a 409 valuation in about a year, which is actually a negative 6.61%. So using random forest, definitely showing a bearish market over the next year. And now that we got the average data here, it's showing a projection of 425, which is actually a minus 3%. And that's taking the average of the M5 rule and random forest. Staying on this chart for the average of the M5 and the random forest, you can see we're starting to head into a dip for the S&P 500. And if I pull up the actual market movement right here, so this is for the past month, we can see that dip starting. And let's just pan out 6 months. So we've gone up, and based on the computer modeling, this is going to be heading down for a slight bear crash. And it looks like it's going to go down at least negative 2% based on the random forest. And if we just want to look at the more bearish method, without taking into account the average with M5, that brings us down to nearly a minus 6 over the next couple weeks into, looks like into October, when it starts to tick up again, but there's another drop. I will provide an update in 3 to 6 months to see how this projection's panned out, along with some of the stock valuations I've done in other videos. Hope you found this interesting and useful, and if you subscribe, you can see how all of this turned out in the next couple months.